Hi, and welcome to another fun, fact-filled flask of financial features that have nothing to do with Harry or Meghan. After a spectacular Friday, U.S. indices are set to respond to futures despite a breakthrough in U.S.-EU tariff talks. Nasdaq contracts peaked at 12.7K and are now headed south again in what is now a nearly 2-week rout. This after bottoming as the week ended. Here's what the Nasdaq actually did. We see a lot of dojis, a neutral RSI, and perhaps an easing of the MA's plunge. The MACD crossed dramatically above its signal, but we're still quite negative. On the daily chart, things seem a bit grimmer regarding the oscillators, but at least we can see we're still within the confines of a possible retracement. 12,195 should probably be our downward target. Break below that, and we're probably in trouble. Treasurer Yellen on Friday addressed continuously rising bond yields, claiming that that was a sign of economic recovery. The dollar is enjoying its upward momentum after non-farm payrolls on Friday surprised at 379, double the expectations. Weekly hours retreated slightly and employment is down 0.1%, but participation is flat at 61.4%, and the trade deficit added another $1.020 billion to land at $68.2 billion. At 3 p.m., wholesale's inventories are expected to strengthen somewhat, so stand by for that. U.S. futures optimism is pushing European indices up this morning after they ended down in most major exchanges Friday. The euro is down 0.25% after France's trade deficit increased to 4 billion euros in January, and Italy reported a doubling of its year-on-year retail sales. It contracted by 6.8%. At 4 p.m. GMT, the Eurozone's consumer inflation expectation and last year's Q4 manufacturing sales. Asian shares are getting clobbered this morning. The Hang Seng down 2%, the Nikkei by 0.4%, but Australia's S&P managing to add about the same as Japan lost. Sunday's data saw Japan's current accounts dwindle to 650 billion yen and westward, an impressive 30 billion yuan increase in China's trade surplus. For the first time, China is not setting an economic growth target for its latest 5-year plan, but officials are supposedly aiming at 6%. The foreign minister Wang Li yesterday warned U.S. President Joe Biden against continuing his predecessor's Taiwan policy. Tonight we'll be getting a data blitz from Japan, including GDP, household spending, and some employment data. Technically speaking, the dollar-yen is showing some fatigue. The RSI decidedly grim, and although we're still skimming the moving average from above, we're quite close to this upcoming week's central pivot point, so look out for the numbers tonight. WTI continues up this morning, lagging behind post-$70 Brent, which got a swift kick in the pants after Saudi oil facilities were attacked by Iran-backed Houthi forces yesterday. Gold is at $16.95, just above its long-term support level, and Bitcoin is holding steady in the 50 region as Bloomberg opens the week with an article explaining that the closer China gets to releasing its digital yuan, the more threatened other cryptos will become. Global real estate giant and birthplace of the CFD, Jardine Matheson, this morning said it was buying back whatever its shares are still out there. You can read all about the company in James Clavell's novel Noble House. And so the week begins. Come back tomorrow. We'll have a lot more.